Hello, hello everyone. Hope you're well and had a good weekend. Thanks to Nick and A1 Trading for having me back on another Monday. And I guess I'll go through what I normally go through. I'll look through the charts, what I'm looking at. You guys can ask, I guess, what you want me to look at and see what's setting up. I don't know if anybody else is the same as me, but it's been pretty quiet the past week and a half, I think. Ever since I came on last week, my portfolio has done, nothing. And well, I'm slightly down at the moment. I've got 2 trades on, which I'll go into to talk about. But they've done nothing at the moment. We just have to wait and see. So this SPX, obviously, last Friday was NFP, and I was speaking on Friday about the numbers coming out, how I wanted. With the inflation fears kind of coming into the market now, I didn't really want a big number. I think the expectations was 6 something, 620, 630. And I didn't want it to beat that, because those inflation worries, which has been kind of making the market a little bit messy the past 2 weeks, would probably come in and be getting more uncertainty. And as we know, markets don't like uncertainty. And it's difficult to trade uncertainty. Obviously, you can go straight to buying those risk off currencies, but I wanted it to kind of go to expectations or possibly just under expectations, which is what we got, along with a decent employment number. And it seemed like the markets liked it. I mean, the market obviously liked it from this decent push up. Now, I don't know if anyone was in on the show 2 weeks ago when I talked about the concept of a loss of momentum plus a harder reset. So we had this big impulse here in the SPX, and at this point in time, when I first analyzed it, I didn't like it. I don't like this price action one bit. There's nothing there for me. Big pushes, back, big pushes, nothing. So we had this initial impulse, and again, very similar to what we saw before, a kind of loss of momentum here in this section. And after that loss of momentum, we get our harder ABC reset. So ABC is my personal favorite kind of corrective pattern. And on this C, which is obviously came, on this 4-hour 200, we've got this bullish 180, what I call a bullish 180, which is an initial candle, a bearish candle, immediately followed by a bullish candle of the exact same range. And we ended up pushing on after that NFP numbers, pushing through this B wave here, which I consider this level quite key. Now, usually with this bullish engulfers, you can see that the market has digested within this area, which again is something I like to see before pushing on. And we tag these highs. And on Asian Open, a little bit of a reaction at this level, which you kind of expect. But the important thing to know here is sellers or supply is not taking control, right? We've got to this B wave here, this area of resistance or potentially new support. Tag that area again, and we're coming up to test these all-time highs again. Now, my bias for the SPX, probably maybe today, tomorrow might be a good way to put it, is we kind of consolidate around this area. This is what I think. Let that 20 period, this simple 20 period catch up. And I think towards the end of the week, we start breaking through all-time highs. But the whole structure now, ever since, we had this harder reset, has made it for me a little bit healthier. I don't mind this now. Over here, I didn't like it. And any breaks, I thought if any breaks would happen, it probably would have been immediately rejected, just because that the trend, it doesn't look very healthy. So if we look at the daily chart, again, looking at this daily chart, remember, we have to remember we've come from this decent push to the upside. So the market needs to digest this. The market needs to digest this. And it looks to me at the moment that it has. We've got a slight V reversal here. If I zoom in. V reversal here, corrective pattern, rejection off this 20. Good bullish bar here on the daily, and this is kind of what I do like to see. I like these bars that push up into this resistance area or into any resistance areas, but don't break through, if that makes sense. So I don't really like to see this. as too big of a bar is the easiest way to say it. I like to see this happen and a couple of bit of digestion here. Again, let this 20 catch up before breaking through. So for me, my bias for the SPX is for that to happen. Now, I could be completely wrong, obviously. No one's ever right 100% of the time. But I think if we get price action similar to that vein, it makes me more confident in the fluidity of what can be potential markets moving forward. So, you get a breakthrough, you expect the markets to go a bit more risk on. Those commodity currencies to be stronger, although the CAD has kind of weakened off today, as Nick was talking about last time. But you expect those commodity currencies to gain strength. If you don't know what the commodity currencies are, it's the Aussie, the CAD, and the New Zealand. Playing those against the Swiss, the yen, and the US dollar, which have been weak. So I think if we can get possibly Monday, Tuesday, Wednesday digestion and push on, that for me would look quite good in the SPX. So it's starting to look quite nice for me. And I do actually have a trade on this US 30, which after US have opened just now, has taken a bit of a reaction off this supply zone here again. I mean, that's fine. That's my trade is in, so I can't touch it. My plan is I have to hit 1-to-1 risk reward ratio, which is here, before I can move anything to do with my trade. That's my trade management plan. Take 50% off at 1-to-1, and then I trail the rest. So we've not reached that yet. And again, if we look at this area here, we've had quite similar, right? A, B, C. Bullish engulfer here on C. Digested that engulfer. 16 hours of price action, digesting that engulfer, and off we kind of went after NFP. This is quite volatile. But depending on what happens, possibly a little bit downward movement towards that 20 before heading up. That's, again, is my bias. Although you always have to take the other side of the coin, where this, no doubt, is a hammer. We've rejected this area before. Possibly we end up going down. That can happen. Either way, if it does end up going down, I'm not going to panic, because you stick to your strategy no matter what. And my strategy dictates that I can't get out of this trade until it either hits TP or hits stop loss. So whatever happens now is going to be psychologically driven, right? Same with it, trading over news, or when you see kind of volatility, anything that you do that's not within your strategy is a bad trade. No matter if it makes money, no matter if it loses money, it's a bad trade. So even if you get worried that possibly you might have lost a trade before. So I'm looking like I'm going to lose this CAD Swiss trade that I'm in. And if I just take my profits here because I'm worried that CAD Swiss is going to stop me out, and I'm what if this comes down and stop me out? I'm going to lose 2 trades in a row. That's not really, it's not how you should really trade. It's sticking to your strategy no matter what happens. Because I don't know about you, but for me, a lot of the time I used to do that. I used to get a bit worried, take stuff out early, and more often than not, it would end up going in the direction that I thought, right? I don't know if that's happened to you, but it certainly happened to me a few times. So all those psychological decisions, for me, never worked out. So whatever happens now, I'm in the trade. My analysis has been done, and I can't switch it. So Dow, I'm still in that. I've got a CAD Swiss trade on as well, which I took on account of a breakout. This V reversal followed by another V reversal, and again, this consolidation, letting that 20 period. For me, at that point in time, it looked like that pressure was rising into the level. CAD Swiss was on an uptrend. And let me know if I'm going here too quickly, but CAD Swiss was an uptrend. Had a nice corrective here, pushed through, and again, another corrective, and it looked to me at that point in time it was potentially continuing on that trend. Now I do like chart patterns. I just want to say this is there was a study done, I think, I can't remember who by, but I read a study about chart patterns. And that if somebody takes, let's say, channels or flags or whatever, every single time they see them, it doesn't work. Right? So, and I agree with that. The key with me with chart patterns and things of that nature is the context in which they come from. So if we had, for example, let's look here. For example, we had this big, massive push, and we get a small kind of channel corrective like that. I would never take that long. You know, you got to think about the impulse it's come from. I mean, I know it did end up going a little bit long, but it ended up coming back down. So you got to think about the kind of structure and the framework that it comes within these chart patterns. And trust your analysis. Discipline is key. If you take a loss, acknowledge. Yeah, correct. Yeah, Dean, you're right. And also, not only if you take a loss, review your loss. So do your trade reviews. I like to do my trade reviews on the weekend and figure out, to an extent, you can't just keep, you know, tingling with your strategy, adding this and adding this, because nothing's going to be right 100% of the time, right? You're never going to be, there's no such thing as a holy grail. And if anyone tells you there is, then they are full of it, basically. But yeah, when you're learning, especially, why did that go wrong? What happened? You know, how can I improve on my strategy? Did I take something when it was too extended? Or was this potentially in the way that I should have realized? You know, and using those things to then continue to improve. It's just a long process. But yeah, you get to the stage where it's definitely worth it. So anyway, CAD Swiss. CAD Swiss touching off this 200. Whatever happens with it, you know, it might come down as a loss. It might reject this 200 and end up going back up. I think with the fundamental view of what I perceive as decent bullish action in the stock market, you'd expect the Swiss to come off a bit. It's whether I stay in long enough for me to potentially get that profit. So CAD Swiss is in. It's not looking great, but it's not stopped out, and I'm not going to do anything about it. Okay, so what I'm looking at for the week ahead or the day ahead, this New Zealand yen has been quite interesting for me. On account of this larger pattern, head and shoulders here, good steady state trend up into this area, nice corrective, good strong push through, and looking at a steady state retest to go long. Now, what I need to see, and it needs to show me it today by the end of the day on this daily chart, is a bullish close in this candle, ideally with a bit of high volume coming in, creating a quasi morning star pattern. Hey mate, can you please talk about the pound CAD counter trend trade that you'd mentioned last week? Yeah, I'll go through that part. So I didn't actually take that, but I'll go through why I didn't take that. So morning star. So I'm looking at this bullish bar here, again on a bit of high volume to go long. So NZD-JPY I like. We're going with the trend. The trend is your friend, and I don't mind taking that long. The end's been weak. New Zealand has been relatively quite strong on the day. But again, we take the opposite edge of the storm, the opposite side of the spectrum here. You can look at this as a channel corrective, possibly moving down. So we'll have to see what happens. Again, I can't enter a trade until everything fits my criteria, so my entry criteria. And I'm not just going to take it because I think it's going to go long. I have to get something there that's going to put me in. So something has to get me in order for me to go long. That's New Zealand yen. China 50 I like as well, China A shares, which I did talk about, I think, last week. And it looked to me at this point in time, it was a bit of a topping structure. But again, we're getting this corrective back to the area. Now, for my correctives and my retests, I like between 5 and 15 candles, right? Anything more than 15 candles, I get a bit worried about, because with my back testing, I found that when they have too many candles on these retests, sometimes they do end up failing, or in terms of my statistics, they kind of end up, not all the time, but a lot of the time they sometimes end up failing. So I like to see 5 and 15 candles. We're still okay here. Looking for a retest of this area. Remember, obviously for a retest, it needs to touch the area and reject the area. Getting that 20 here to play that long. And with this index, when it wants to move, it really does move. So if you get in on a good trade, you can make a decent bit of money from. So that's China. I do like, one thing I do like is Ethereum. as a breakout on this 4 hour. Now this is counter trend, and this for me is a kind of textbook cup with handle. That's absolutely textbook for me. The handle here, roughly 50% of the size of the cup. And I can't take this yet. I'm looking, because this is counter trend, I need to have another one, so a cup with handle within a cup with handle. But the problem is I can't take it as well because this 4 hour 200 is in the way, which is dynamic resistance to price. So if I took the breakout there, my stop's under here. It's, I don't get 1-to-1. I can't have anything in the way of 1-to-1 before taking that long. So that's one of the other reasons why I like waiting for this extra little reload. So cup with handle within a cup with handle. Hopefully that 200 come down a bit. So your breakout is above this 200, which then, if it does break through, adds as a added area of support to price to the upside for potentially movement upwards. Now, the other way you can look at it is with a breakout retest. So if it does break out, you're hoping that your catalyst, if you look at the 200, probably like this, an engulfer that keeps price action above the 200, your stops will be beneath. And again, you've got that 200 as added support to price. So Ethereum as a trade, I do like out of all the crypto. Hey, Indura, how are you doing? And actually, this was one that I missed today. I did miss this trade, and this was a nice setup for what I like. So our cup with handle, ABC, again, complex corrective after that cup. This is actually an ABC 1-2, 1-2, push through. And again, look, it works time and time again. We've got an ABC corrective. Our C wave has come on this hammer, rejecting that 20, rejecting that resistance area, high volume coming in. And I would have taken that trade if I'd seen it. I wasn't looking at the market at that point in time, but if I'd seen it, I would have taken that trade long. And it did kind of push through. And I think you would have hit TP1 and it's just falling off a little bit. But if TP1 was hit, you wait for that anchor and you move your stop. So that was that's a nice setup that unfortunately I missed. You're not gonna be staring at the charts all day, every day, unfortunately. But I'm still looking Ethereum long, but it needs to give me exactly what I want. We've broken through this 20. Again, you take the other edge of the sword, it could look like a possible wedge for movement to the downside. So again, you always have to take, you can't be married to a position. You have to take both sides and think about, okay, what's the arguments for this and what's the arguments for that? And hopefully that you'll get that, conclusion, whether you can take the trade or not take the trade. Nothing's ever going to be perfect, put it that way. But as long as it fits your strategy, then great. Pound Swiss. Actually, I'll go into Pound CAD. Somebody asked me about Pound CAD. Okay, I'll go into Pound CAD about why I didn't take it. I did talk about Pound last week because there seemed to be a lot of setups on the Pound, right? So this I had to disregard. It looked as if, again, this was a cup with handle, but I couldn't take it, right? Because it then fell off, right? It had then reset up and it looked to be looking okay. But from this, okay, I'm just trying to, sorry, excuse me, technology problems. We had a cup with handle here, but I didn't like that this broke through, okay? After that it broke through, what I'd be preferential, or what I was looking for would be a retest of that area because it's just become a little bit messy. It was still valid. And if you had taken that breakout, I wouldn't have minded that. I don't think that was a particular bad trade. The pound just kind of came off quite substantially. But for me, after this happened, ideally you get something a little bit more like that before going long. But after this kind of fake out already happened, I've got to wait for the breakout retest. It just gives you that little bit of added protection to that particular trade. So now with Pound CAD, if the CAD wants to come off a bit, this is all disregarded for me. And I've got to look at the setup if indeed it does set up from here. So this to me now doesn't really matter. I'm looking here, and at the moment there's really nothing there for me to go long. But what I do like is pound Swiss. So pound Swiss on this daily chart, which I think I looked 2 weeks ago on the show, and I counted this cup with handle ABC pattern. We got a tag of the level A, B, C. Big bullish engulfer here. Again, you've got your ABC 1, 2, and it needs to kind of show me something to get up to this level. For a breakout, I'd need another reload here. Again, let that 20, that rising pressure into the level, because we are trend continuation with this. Right, this is trend continuation if we back out on the higher time frames from this big move. Again, complex corrective, you can look at it like that. Big bullish bar. So for me, again, as a breakout, it needs a reload, but it's okay if it breaks through and retests. I would happily take that pound Swiss to the upside. So pound Swiss, I do like again. Now, a good thing, what I am in, and not in this account, unfortunately. I wish I was, but I took this trade before I opened this 200K funded on USD ZAR. And this is quite a good, I think, lesson on the ethos that trading is 30% strategy and 70% psychology, right? 70% discipline, patience, trade management, etc. Is that here's your 30% in my mind. Like, this is your 30% strategy. It's a head and shoulders pattern. You got a few bars here of accumulation prior to a break on decent volume, which is where I took the trade. And that stuff can all be taught. Like, you can teach that stuff. This is the stuff that's quite difficult. This is your patience part. So you got your strategy here and you got your patience, because you have to remember this is a 4-hour chart. So you're waiting 4, 8, 12, 16, 20, a day for this corrective to over, and then it moves. Then you're probably waiting a day and a half to get your swing. So we move our stop here because we've got our swing, push down. Got our swing, moved our stop down a little bit, push down again, got another swing, moved our stop, and again, we're just waiting for the next swing to occur. So that trade has actually been really nice. And it's just really me sitting on my bum, doing nothing. Hey Bjorn, NZD USD. Okay, I'll look at NZD USD. Out of interest, everybody watching, what kind of strategy does everyone employ here? I'm quite interested to know. NZD daily, what direction are you looking, Bjorn? I presume you're looking long with the dollar weakness. So for me, push up here in NZD USD, larger corrective, pushing through. I mean, we're certainly ranging at the moment. Is it a chart on this 4-hour? You could look at a V reversal here. Decent V reversal, but again, with these V reversals, it needs to break through the initial area in order to be confirmed for that. So if you're looking long, it needs some sort of, I mean, I'm not going to buy it here. I wouldn't buy it here because, I mean, the move's already done, right? So it needs some sort of corrective for potentially upward movements. But this move needs to be digested for me. If we put our area here as what I would consider the area that price is respecting recently, I want a corrective there to digest that area, push up, reload before taking NZD USD long. I mean, USD has been weak, right? Trend following, yeah. Something similar to my market cipher. I don't know what that is, Rahul. Market cipher? Not sure what that is. But trend following, yeah, certainly the best way to go. So NZD USD, yeah, I mean, I certainly wouldn't be buying this market right now. You've got to wait for a little bit of a corrective here. Let that move digest before taking that for taking that long. But if I'm being completely honest with you, I'm not trading that. With no offense here, but it's just not a market that I want to trade. There's no clear direction there at the moment. It just looks a little bit messy, which a lot of markets have been the past 2 weeks. Really, a lot of markets have been a little bit messy. I don't know if anyone's different. For me, I've really been doing nothing. I've taken 2 trades this month so far, and they're both really doing nothing. So there's times, and this is a skill I think you learn as you go on, is times when you realize when to stay out the market, and when the market's a little bit fluid, which is why when I was watching the NFP on Friday, I didn't want those numbers to come in high. I wanted that inflation fears to calm down, because as traders, you want fluidity, right? You want markets that you can trade. I mean, you can't. If you have a range trading strategy, then fair enough. But I can't trade that. I don't like trading that. I can trade this. Give me that all day. But those inflation fears were kind of annoying me. I'm like, for God's sake, just move on. But and I think the market liked the fact that employment was decent, and jobs didn't highly exceed expectations. So this is what I'm hoping for the next week, is we get that kind of fluidity, because that's what you need to make money. I think the last 2 months has been sideways. Yeah, Kevin. I mean, last month for me was great. Last month. This is my last month here. I'm sitting at 11% with this USD ZAR in progress. So last month I thought was okay. And bearing in mind, fair enough, you can say that, because out of these trades, I didn't even get more than 1 hour at them. So yeah, you're probably right. But this month, this is all I've got, and both of these are in progress. And one of them doesn't look okay. The Dow might be falling off, so maybe maybe I end up losing 2 at the start of this month. We'll have to wait and see. What do you think about gold? Gold. Let's have a look at gold. Gold. A lot of traders like trading gold. I don't really trade it a lot. I actually had a long from here. That was a nice trade. I stopped out yesterday, the day before. For me, with gold, it's been a decent push. Was it big bearish bar here on the daily? If we drill down to the 4 hour, my pen's not working for some reason. Technology. Excuse me. Gosh, there we go. Excuse me, guys. Sorry, my pen's decided to stop working. So gold. Anyway, gold for me, I wouldn't be buying gold right now on account of this daily chart. I need to wait to see again. Just let that digest. At the end of the day, you've got a bearish bar here. I didn't create bearish engulfers, but they work for a reason. They're used for a reason. And for me, when gold does move, okay, it can move. Yes, it can continue to the upside. Of course, it can. But in terms of entry, and what I feel is gold likes quite a deep retracement. Whether you end up getting a bit of a retracement here in gold, we'll have to wait and see. But for me, I'm not getting on it. I'm not going to buy. Or if I had to make a decision on what I'm doing in gold at this point in time, it would probably be selling it. But I wouldn't do either. If you put a gun to my head, I'd probably sell it. But I wouldn't do either at this level. It needs to show me something a little bit more to go long or short. Because at the end of the day, the moves happened, right? The moves happened. You're buying up here, you're probably getting into FOMO. Struggling to get perfect entries. Any suggestions? Yeah, and there's probably no such thing as a perfect entry, unfortunately. You're just trying to find entries that give you that little bit of edge, I would say. It depends on also what strategy you're saying. And also with that, perfect entries, I think that can also relate to stop losses. So for me before, my stop loss was too tight, right? And which means my entry had to be perfect. So I used to put my if I was taking a breakout retest, I'd buy on a particular candle and my stop would be underneath that candle, which sometimes would be a 10 pips, 12 pips, 15 pip stop. And it was too tight because I was trying to time the market perfectly. Like, the market's not perfect. And giving myself a little bit of extra room on my stop loss means you don't have to get those perfect entries. And I know that reduces your risk reward, but it means you win more trades. You know, for me, for example, like last week, I'm perfectly happy winning trades, even though I'm not making as much money from them. I'm perfectly happy winning more trades than having, let's say, losing 4 of these and winning 2 that maybe have 2 or 3 are. Because you think about the psychology of it, is I don't like I don't like losing trades. I don't like losing anything, no matter what it is. But my psychology doesn't like losing 4 trades in a row, because then sometimes you can get into that point of, oh my God, where's the next one going to come? Potentially over trading, potentially then over risking because you've lost 4 trades, which may mean, you know, 8% of your equity or whatever it is, and you're annoyed at yourself. So for me, just simple things like moving that stop loss to give you a little bit more room certainly helped me. Also, the use of a 20 period. You know, so in terms of timing the markets, and I'll show you this actually with EuroCAD, which I'm not in, by the way. I did have an order set, but I'll show you this in terms of timing the market. Is that my setup on EuroCAD is actually an A-class setup, right? On account of this. Good V reversal, corrective pattern, tag that level, rejection again, another corrective, and I had my order in here. I took it out on account of this. Oh, sorry, I'll zoom in so you can see that better. Excuse me. I took it out after we had this push up in NFP. However, it looks to me at the moment we're getting this ABC. So that's all great, right? That's all great. But if you're looking about timing the market as well, look at this on a daily chart. Right, we had this impulse to the downside, right? And what looks to me as a corrective, right? This looks to be a corrective that is just breaking through. So in terms of simple, again, this is all simple market structure. This for me is a good time to enter, right? Down here, and also using this simple 20, looking at, you know, extensions down here is not a good time to enter because, you know, I've missed the move. Down here, you've missed the move and you've got to accept that. And you just got to wait for another, you know, there's always another opportunity. There's always another trade. It's not about that one trade. And I used to think when I was, you know, lost a trade and I was in that moment, in that one day, it was usually one day that messed me up. And, you know, there's always tomorrow, there's always another trade. So this, in terms of timing, is great for me. So this trade, I really like. Even though CAD has been, you know, had the decent or not great numbers, for me, that setup is great. Yeah, it seems like I'm always 20 pips too late. Maybe I bring, you know, a 20 period moving average. I am a big proponent for the 20 period moving average because it gets me in trades, not every time, but a lot of the times, roughly about when it moves. You know, so if I'm getting a breakout retest, if I say it here, let's say this is the resistance area. If I get a breakout retest, right, and that 20 period is close by, that for me is a great kind of visual guide that that potential currency pair is ready to move. However, and this is why I like context as well also, if I get a decent impulse to the upside like this, that retests, but my 20 period is down here, you know, I'm not going to get on that because for me, the moves happened. And again, using simple chart patterns, this move is not digested. And more often than not is probably a bad way of saying it, but these big impulses into the level, it's kind of like an elastic band a lot of the times, sometimes liable for a snap back. And you put a 20 period simple on it, it's, you know, there's a large gap between that and price action. So I think maybe Tian using a simple moving average, if you add that to your checklist and say, right, I've got to take trades roughly in or around this area, might help you time the market a little bit better. You ever get up and walk away? Yes, I do. I have walked away many times recently. Actually, probably in the last 2 weeks, I've got up after my morning scan and thought, well, there's nothing here for me today. I'll see you tomorrow. But in terms of when I was learning how to trade, no, I couldn't walk away. I couldn't walk away. If I'd losing too much trades, I'd go downstairs, but I have to come back up. I was like addicted, like properly addicted. I have to come back up and make a trade to get it back. And there is times where yourself, you have to walk away. Now, when I say walk away now, it's not that I have to walk away because my psychology is gone or my discipline's gone. It's just because the markets are pretty quiet and there's nothing there to trade. But before, I needed to walk away because my mind was gone. Yeah, like I said, my mind was gone, but I couldn't walk away. And I think there was one afternoon, and I know I've probably said a few of my stories over the past 2 weeks, but there was one afternoon where I think I lost 6 trades, and 6 trades in a row, scalping. I don't know why I was scalping. I'm not a scalper. I do scalping for kind of fun, but I don't know why I was scalping that at that point in time. Probably a year into my career, I didn't really have a clue what I was doing. And I lost about 6 trades and got so angry with myself, went downstairs and said, that's it. And I probably sat on the sofa for 20 minutes before I came back up. And then I lost another 2. So there is times where I think you have to walk away, but I know it's difficult. Yeah, and don't worry, you're normal. And and I think a lot of traders probably don't want to say the real psychological effects of that trading has, right? It's a huge ordeal. It's the hardest thing that I've ever done. Trading, I think, is probably the hardest, easiest thing you can do. And that sounds strange, is that I'm at the point now where I wouldn't say that's probably a bad way to say it. It's not easy. It's certainly, it's boring, probably. Good trading is boring trading. But I remember that when I was going through that period where, for a couple of years, that what was I saying? I just lost my chain of thought. I've completely lost my chain of thought. Sorry, guys. When I was going through that period of, I've lost my chain of thought, guys. Can someone remind me what I was talking about? Because I don't know. It's 6:37 here in Dubai, and I've done about 4 streams today, so I apologize. Anyway, sorry. The hardest, easiest thing I've done, because when you're going through that difficult period, you think you're doing it alone, right? You probably think you're the only person that's having this problem. You probably think you're the only person that's getting this stressed out about it. But let me tell you, you're not. Every trader you probably talk to, and Nick's probably the same, and other traders you look on this show, if they've not gone through that, then for me, I'd find it a bit worrisome. If they're not, kind of saying it was difficult for me psychologically and I'd lost all this, then, I'd be a bit worried about it. Because, and a few friends of mine that are traders, actually one main friend of mine who I can actually talk about trading, is that it's okay to go through that period, right? Because the end of the day, when something has the potential benefits that trading has, it's not going to come easy, right? Do you think, if you end up getting a $300,000 account or $1 million account and you make 10% one month, you make 100 grand, you think that comes easy? Of course it doesn't. Like nothing that's worth it comes easy. And unfortunately, I think in society kind of nowadays, everybody wants stuff to come easy, and they want to be millionaires very quickly. Unfortunately, in the trading game, that's not really how it works out. And I think it's how everybody starts. I mean, it's how I started. I wanted a Lamborghini, but that certainly wasn't happening. I ended up losing most of my money. How do you use? It's not just. Sorry, I'm just going through the questions. Not just about the money. It's about not beating the system. I presume you mean it's about beating the system. Yeah, I agree with you, T. And that was for me when I kind of got to it. It's like I don't really care about the money anymore. For me, it's just about being consistently profitable, and the market's taken so much of my money. I'm getting it back now, and I don't care who loses it, as long as I make it. I don't care if anyone loses it, because I've lost enough, and I went through enough horrible times for me to lose anymore. So I agree with you in that. And it does, as you get, but yeah, I agree. It's not about the money for me anymore. It will be hopefully soon, but when you get more equity, but it's a great feeling just beating the market. How do you use volume indicator to confirm your entry? So for me, I trade two strategies. So I trade the breakout and the breakout retest, right? So for the breakout, what I want to see, I like three different patterns as my context. One is the head and shoulders, one is the cup with handle, and the other is a V reversal. So let's say we have a cup with handle here. For my breakout, what I want to see is lowering volume during this, what I call accumulation phase underneath the level. So if we've got higher volume coming here, you kind of want to see the volume indicator lowering as that handle is being, as that handle kind of pattern is being progressed. And ideally, now you don't know this until you take the breakout, but ideally on the breakout, higher volume comes in because that just shows me institutions are moving into the market. For the breakout retest, right, if we have a breakout here and we have let's say a steady state retest on that 20, and I get my catalyst, which again is just simple chart patterns, possibly a hammer here. I want my catalyst, this candle, to come on higher volume. And again, within this retest, you kind of want to see lowering volume during that retest. So ideally on the break, higher volume, lowering volume during that retest, and higher volume on the catalyst. How do you use volume? Sorry, I'm just going through. I swear there's my spirit in the market asking me, are you sure? Are you sure? Do you mean when you take a trade, Vivid? As in you think most of your trades are going to lose? Or because I think I know what you mean in terms of if you're losing more trades during your kind of progression phase, then if all you've known is losing trades, then I get it because you don't want to lose any more money. But one of the biggest thing I can do to try and combat that is go and back test. If you go and back test for a period of a month or two, excuse me, come back to the markets, it'll give you a lot of confidence because you'll then know your statistics. And actually, who here has done some back testing? I'd like to know. Has anyone here done it through a period of back testing? The problem for me is not taking profits when it's going well. So Kevin, as my trade management, like I said, I take profits at 1-to-1 risk reward on every single trade. Every single trade I take profits at 1-to-1 because, as you know, more often than not, the market's not going to give you 3, 4, 5-to-1 every single trade, right? And it didn't to me last month, right? And the market is giving you that money. So just take some of it off. You can place 3 orders in. Let's say you've got a trade of, I don't know, let's say 10 lots, right? You're placing 10 lots on a trade. You could put 3 orders of 3.3 lots or 3.33, whatever thing. Take one off at 1-to-1, take another off at 2-to-1, and let the third one run. You know, so there you're taking money when the market gives you available, right? And then you're allowing yourself to let trends run by keeping a portion of your trade on the profit, right? So that's something that you can again look into if you're placing one order, right, and you're looking for, 4 or 5-to-1. I think more often than not you're not going to get it, and maybe adding a few orders in can kind of help with that. I'm just going through the questions. Exactly, I want my time most important. So yeah, I guess you want the freedom. Yeah, the freedom is great. The freedom certainly is nice, and I really enjoy it. I mean, I love trading, so I like getting up in the morning. I mean, it's not great when I'm down $2,000, but that's okay. How long have you been trading? So I've been trading about 6 years. It took me 2.5 to become profitable, I'd say. So I've been trading the market. I had an initial interest when I was about 18, which for me is, how old am I? 14 years ago now. Jeez, I'm getting old. But I didn't really start doing it seriously until 6 years ago. And then it took me, again, obviously some time to get profitable. It's almost like the market and I have become testers of each other. Yeah. Unfortunately, Vivid, the market doesn't, this does sounds bad, don't take it the wrong way, but the market doesn't care about you, doesn't care about me. The market does what it wants to do. And it's not out to get you. I felt like it was out to get me personally on my little on my little account. But you think a 5 trillion market is out to get you? Unfortunately, and I'm not saying that in a bad way, Vivid. I'm just saying that I felt the same way as well. Been backtesting for 5 years. Wow, well done. I'm backtesting now, but for 2 weeks only. Well, that's good. I mean, Marine, a lot of traders don't backtest. So you're doing it. You're already putting yourself ahead of a lot of traders, because a lot of traders don't do it. I mean, whether the 95% of failing traders, whatever the number is, I don't actually know the real number, but I guarantee you 70 or 8% of them don't backtest. So what you're doing right now, I guarantee you, as long as you do it properly. Now, you can backtest, but make sure you're doing it completely properly and you're thinking that this is real trades, because if you do that, you'll come back into the market and you'll have a lot more confidence, and you'll be able to use the statistics that the backtesting gives you, your win rate, your payoff ratio, etc. And you'll know. So you'll know if you have an average drawdown of 6%, like I do. I've got an average drawdown of 6%, which is 3 trades. You'll know at the end of those 3 trades, possibly 4 trades, that the drawdown's coming to an end. So you're not as psychologically worried. Because remember, the main thing you're trying to do with all your trading, and that's why traders have a strategy, right? That's why traders have a strategy and entry criteria. That's why traders have a trade management criteria. So what do you do? Where's your stop loss? Where's your take profit? It's because you're trying to make yourself robotic, right? You want to do the same things, because trading is psychologically based. So why not take that out of it? You're not going to get it out of it all the time, but by creating all these different plans. Okay, what do I do in news? So I have a plan on what do I do with my news events? I've got a plan, obviously, on my entry criteria. I've got a plan on my trade management. I've got a trading plan. I've got every kind of something written down to make sure I'm taking those psychology or those fears in my brain, which do come out of the market. And you do that through things like backtesting and planning basically what you're doing before you even enter a trade. So you're becoming like a robot, just doing the same things day in, day out, day in, day out. Gets a whole lot better. Hey Nick, how you doing, mate? You okay? Thanks, you backtested. I have. Okay, good. Well done. I believe the market cares about my financial freedom. Unfortunately, it doesn't, Vivid. I wish it does, but you are the only one that can change that. And I've said it. I probably said it on every show I've been on, but backtesting is the #1 way you can change a lot of things around, and it certainly did for me. Backtesting, but also remember, when you're backtesting, you have the time to develop your strategy, right? So, adding in stuff like context. So for me, the breakout used to be, okay, I'm just looking for a breakout of the level. I'm looking for the retest of the level. By doing my backtest, I identified the 3 patterns I like to see here. I identified the 2 patterns I like to see here. I identified that I like seeing volume on a catalyst. I identified that I like taking profits at 1-to-1, because if I don't, a lot of the trades sometimes comes back and hits my stop. Do you only trade pairs, or do you look at indexes? Yeah, I trade the indexes as well. Yeah, I've got a trade on the Dow, which I think is coming back off, unfortunately. So I trade, these are the indexes I trade. So the Aus 200, the China, DAX, dollar, Nikkei, SPX, UK 100, and the US 30. That's what I trade. Commodities, I trade silver, gold, and palladium. That's what I trade. Scalping I do as a bit of fun. I don't really, I put 0.1% of my equity on a scalp, but I just do it as a bit of fun, to be honest. When there's in quiet markets, if I'm sitting down, I'm like, okay, I might go and scalp the market today. Thanks, Nick. Appreciate that. Pound. How do you backtest? So I use a program called Forex Tester, and if you watch the video I did last week, I did quite a lot of detail on the exact way that I backtest. I don't think I have time to explain right now, but basically I backtest and I analyze every single trade that I take and learn from it. And sorry, yeah, to go into that with the backtesting, it gives you that freedom to allow you to define your strategy a little bit better. So I didn't actually finish that thought. And that's how I developed those contexts here and all that context here. And also my trade management to make sure I'm taking money out the market. Because before, my first kind of strategy after taking a trade, we take one trade and just let it run, right? Just let it run and try and trail the stops. And really, you're waiting for those couple of trades per year that just go on and on and on to give you your edge, right? Because a lot of times you might get a stop there and it comes back and hits you out. But psychologically, again, you got to think about the real world. I didn't like doing that. Are you okay with sitting, 1 or 2 months and waiting for a big winner? For me, I'm not. You might be. Again, another good thing to do would be to do your SWOT analysis on yourself. What do you like? Are you a patient person? Are you not? When can you trade, etc.? Pound Aussie. So let's look at some charts. Sorry. But as well, that's what I'm here for, isn't it? Let's look at some charts. Pound Aussie. Pound Aussie, I was looking to the upside on a retest of its area. However, I can't look at that now because we breached. So for me to get a corrective, this can't breach the highs of the break. So for me, at the moment, Pound Aussie could potentially be, again, losing momentum to the upside. If stocks push, I fancy the Aussie to get a little bit of strength into it, in which case you could potentially see this come down. But you could see, again, one of my favorite kind of contexts is a big impulse, a loss of momentum, a harder ABC reset before continuing on. And if we look at the Euro USD, we're kind of getting something similar to that now. So if we look at this Euro USD, now I do think this is probably one that might not work, but we've got this big impulse here, potential loss of momentum, which I did talk about last week actually, and you could get this harder reset. Let me do this here so it's easier. So a harder ABC reset before going long, because again, you just look at that chart there, just looks a little bit like it's losing momentum, right? I thought the is no strategy better than price action, support and resistance, but your cup and handle and corrective is brilliant. Oh, thank you. I just want to know who's your model. I think I answered that last week, didn't I? My model was my mentor. If you look at the video last week, I talked about my mentor, and he's kind of my role model in Forex. But this is a good something to look out for, and I'll show you again what I mean. I did talk about this before, that kind of impulse, loss of momentum, hard reset, and it came back here. So we can see the impulse, loss of momentum, and then the harder ABC, right? ABC here. Big push to the upside. And I'll show you another example actually, which I did show I think 2 weeks ago, but I think some people are new here. So I'll look at this, because this is another great example. I'm just trying to find it. Excuse me. I'll see if I can find that. 1 second. Pound Aussie is bullish right now. Euro AUD. Okay, have a look at Euro AUD, and I'll see if I can find that chart, because I think it's something that I've noticed quite a lot. Oh, sorry, Euro AUD. CAD's coming off. I guess CAD is losing a bit of strength. It is. Euro AUD. Well, the original thing I'm looking at is this big bearish engulfer, and again, you put a line on it. That 200 is coming down. Obviously, we have been on a massive downtrend for a while. If you take this big structure as a whole, I mean, are you looking at that as a bit of a corrective from that big structure? Probably not. Probably not. And this is actually, if you look at Euro AUD here, when we talk about, I certainly don't like to see climactic moves breaking a level, right? Climactic moves being like this. Right, think about Bitcoin 2017. I always say that example. But that breaking a level is very liable to a snapback, and that's exactly what you got. I'm actually developing right now, or trying to develop a fake out strategy that involves this kind of thing, a climactic move. Look at that 20 down here, not ready for a break for me. It's coming from here, and that's why I always like a bit of accumulation, a bit of a reload prior to this area before it breaks. because fake outs happen most of the time, right? So we want to make sure we're not involved in those fake outs. And that's why I like the 20 period. That's why I like the accumulation phase prior to a break, because look at the difference between that fakes out, right? And if we look at, I think it's pound Swiss, right? If we look at this pound Swiss on the daily, look at the difference here. See that kind of rising pressure and accumulation into the level, and boom, that's what it did. So the pound Swiss, and that just shows you that those climactic moves are something that I kind of look out for, and something that I'm trying to develop when I'm trying to spot these climactics for a fake out short, because you can actually get quite a decent RR on that. My moving averages are the 20 and the 200 simple. That's all I use. So the red is the 20 simple, the purple is the 200 simple. Yeah, could be, yeah. Certainly could be. And I'll show you another example of it. It seems to happen a lot in the euro. Again, this is a strategy that I'm personally developing because I've seen fake outs happen a lot of the time. So if we go back, I think it was euro JPY. Trying to remember where it was. I think it was a while ago. Anyway, I'm not going to scroll back there, but what I'm saying is that it was actually here on this daily chart. We had another kind of example of a climactic breakaway and boom, snap back. So always be wary of price action that looks like that, because they are kind of liable for a snapback, in my personal opinion. And I wanted to show you before I leave that kind of example. Here we go. I've got it. Excuse me. So that kind of example of a loss of momentum. So here's another example of what I look at, is that initial impulse to the upside, that loss of momentum here, harder ABC reset, push through, and then look how that developed there. So have a look out for these types of things, because I've seen it happen quite a lot. And maybe with Euro USD, I'm not saying that's going to happen. I still don't like USD. I don't buy into any USD strength, but possibly look at that, maybe something similar. Doesn't work all the time. Obviously, it doesn't work all the time. But from this push, does it not look like it needs like some sort of corrective? For me, it does. Anyway, any other questions before I leave you? And I don't know what I think my CAD Swiss is probably going to be stopped out, but that's trading, I guess. Still rejecting off that 200. The only trade that I really like at the moment is this Euro CAD. As long as we get that ABC, if we get that ABC retest to come back down, I like that short. But even though it's an A-class setup, I might not get it. Do you find that certain pairs are more prone to liquidity grabs? I think the euro is quite prone to it, from what I've noticed. But that's only in recent price action, so I may not be right again. Again, this is something that I'm just starting to develop here, and it's not ready for me to use yet. Like I said, I'm back testing it, or actually I'm forward testing it. But I've noticed the euro seems to like it, to be honest. Opinion on US 30. I'm long US 30. Siampa, sorry, I don't know how to pronounce that. Siampa. US, that's not US 30. So US 30, I've got a long trade on that I've been in for quite a while. I was in it from this area, actually. Stops under here. I'm still in that. My TP is at this area. It's getting a rejection off this supply zone again. Let's see. I like it long. I like at the moment, I like indexes long. What's my opinion on gold? On gold, for me, I don't want to get involved in gold at the moment. It's the move's been made. For me, I'm not buying. I'm not buying up here. I need a corrective from here. I bought down here. I'm happy buying down here. And look, there's buying at the 20 in gold I bought down here. What I thought was the start of the move. For me, this is not the start of the move. This is potentially a potential. It can go on. Gold can go on. Gold can go on, but I wouldn't be trading it right now. Is the best way to say it. Agreed. Euro, yeah. The euro yeah, I think the euro seems to be the one that likes that. But also, Tian, is that I don't mind that because I'm looking for these things now. So, you know, the essence, and again, this is not a strategy yet. This is not why I trade, but the essence of my strategy is I look at the 4 hour, right? So this is the 4 hour chart for my context. Remember, if you have a strategy, I always think that you've got a trading time frame, right? And then you've got a higher time frame context, which I think you should use by 2 time frames higher, right? So your trading time frame might be the 30 minute or the 15. Then you should be looking at the 1 hour, 4 hour for your higher time frame. But anyway, for this, I'm looking at the 4 hour for my context. So I'm looking at that climactic move from a level similar to what we just saw there on Euro AUD. I want that 20 period down here, so a big gap. And then I'm looking at the smaller time frame, my trading time frame chart, which for me is a 30 minute or the 1 hour, for a catalyst to get in. Now with these climactic moves, I also want to see volume coming in roughly about there. And if I get a catalyst, which again is simple chart patterns, possibly a hammer up here, that for me is what I'm looking at, because I've found that if I can't say this is not for certain, this is just something that I'm developing. If I sell this, I sell the candle, I put my stop above the candle, and you know your TP is underneath the zone, because the fake out, you know, when you're trading a fake out, the premise is faking out from the area, and this can sometimes be 3 to 4 to 1. So I just have to wait and see. That's just something that I'm developing, and it's something that I've seen. But again, climactic moves. You know, if you're worried you're in one, look at the volume roughly about there. And if you don't know if you're in them, put a line chart on it. You might see these unhealthy, unsustainable climactic moves. You know, you want a healthy trend. You don't want this. Aussie Swiss. All right, I'll have a look at Aussie Swiss, because I've just gone over my time period. I think Aussie Swiss will be the last one. Aussie Swiss, which direction are you looking at, DPS? Probably have to take our new level about here. Again, it's just not very nice. I'll be honest. Who asked me about Aussie Swiss DPS? It's just not very nice. You could look at this as a potentially OBE here on the daily. I like the idea. I like the fundamental bias of buying the Aussie Swiss on account of you'd expect the strength to come in if stocks push up. Certainly if they break all-time highs. But I don't like the chart. You know, I don't like the chart. Again, look at this. It's not a move that I like to really get involved in, to be honest with you. You know, if I'm picking pairs that I like to trade, if I'm looking at the Aussie Swiss in terms of potential for movement, it doesn't even compare to, I know the Eurocard, I probably won't even get it, but you know, if you just compare it to this, that looks a lot nicer to me to trade. So if you're picking the best possible pairs, again, that's my opinion. It'll come down to your strategy. You got to look at ones that are potentially ready to move, unless you're looking at a counter trend. So if you're looking at counter trend from that potential fake, then I don't mind that. You've got your potential catalyst there, right? Faked out that structure. You think buyers, you know, buy stops there. You know, if you're looking at it that way, and if you do think manipulation happens in the market, I'm not going to say yes or no. I know what I believe, but I would say it possibly comes back to those stop locations. You know, you got breakout buyers in there, might be trapped in, and come down to here. So you know, if you're looking intraday, I fancy Aussie Swiss to fall. I'm long on Aussie Swiss. Oh, sorry. I hope I've not taken you out. Anyway, like I said, I don't know how I pronounce your name. Sorry, Siampa. My bias for longer term is long Aussie Swiss. My bias for the next couple of hours is short Aussie Swiss. That would be my personal bias. Keep us updated on that strat, Ryan. Seems yeah, will do. I'll come and I'll keep you updated next week. It's still a work in progress.
What's up, Ryan?
Hey, Nick, how you doing?
Pretty good, man. Hey, we've got another guy jumping on, but before you head out, I did want to remind people that you've got some great new content coming on your new channel. I saw you cross 30 subscribers. Is that right?
Yeah, hit 35.
Hey, see the
35,
humble
trying to get
beginnings,
it.
but man, that's fast. I mean, you're coming up quickly. Guys, go give Ryan a follow or a subscribe on YouTube. Just search up RT.Forex on YouTube. Is that right?
RT space Forex on
RT
YouTube. RT
space Forex. That's
Forex
right.
on Instagram. Yeah, appreciate that.
Yeah, for sure. You guys, he's coming back each week, but I want to make sure if you want more content from him, that's where you can find him. Go check him out. Very much worth your follow. And Ryan, thanks very much for your analysis today. I definitely enjoyed it.
Perfect. Thanks. Appreciate you having me on again. I enjoyed that. Cheers, guys.
No problem. All right, Ryan. Thank you very much. We'll see you next time.
Thanks, Nick. Take care.
All right, guys. We've got another show coming on here, so I'm going to go ahead and back out of this one, and then just stay tuned for just a minute. We'll be back with our next guest. Fingers crossed if everything goes well. Thanks so much for watching. Make sure